Investors want to see meaningful progress on spending cuts and trade deficit reductions. Not everybody agrees with that, but quite frankly, it is the only way that this country is going to get out of the mess that it is in. Good morning, this is James Perry at Perry Capital in Miami, coming to you on Saturday morning, March 29th, after another brutal week in the stock market. Investor sentiment has shifted very negatively. We've got $36 trillion worth of debt. That debt has risen by 40% in the last 4 years. The budget deficit has quadrupled in the last 4 years. And with respect to tariffs and trade, everybody has to remember that 90% of that trade deficit comes from just 10 countries, okay? On the top of the list, of course, is China. Our deficit with them is $300 billion. With Europe, it's a deficit of $200 billion. With Mexico, it's about $175. And fourth is Vietnam with $125. Trump wants balanced trade with every single one of those nations. He believes he can get to a balanced trade figure in 18 months. We'll see. It's going to be hard. As far as spending is concerned, the government spent $7 trillion last year. At least 10% of that, $700 billion, was allocated out from the government to the economy fraudulently and wastefully. I think that $700 billion reduction is easily attainable. It's not going to be pleasant for everybody, but at the end of the day, the economy is going to do better. Less money in the public sector and into the private sector means inflationary pressures go down and productivity goes up. So yes, I think the economy is in pretty good shape. I think you're going to see corporate profitability come in the first quarter at about 10%. That's pretty good. And I think that the GDP, maybe not this quarter, but certainly by the end of the year, should be running at about 2.5% or 3% again. If we do that, the stock market's going to rally, and corporate profitability is going to go up. Consumer spending is going to keep going because the labor market's growing and wages are growing faster than inflation. So stick with it. I think recognize that there's a case for optimism here. It's going to be bumpy, but I do think that if you save a little money in reserve and put some money into the market in the next quarter at a little bit of a lower level or right around here, I think you'll see by the end of the year the stock market's going to be up and investor portfolios are going to be feeling pretty good. Okay? Good luck. Have a good week. I will talk to you soon. Thank you very much. Bye-bye.